Do I need this money in a year? Do I need this money in 2 years? Do I need this money in 3 years? Longer term, stock market's been the best place to be last 10 years, last 30 years, last 130 years. But if you need the money in 1 or 2 years, you shouldn't be buying stocks.
Do you know that it's more than sure that you are not going to be millionaire because you started to invest your money? And now you are probably thinking, what is this guy talking? Because his whole content is about making money, saving money. I believe that investing is one of the most important things that you have to do, and I believe that everybody should do it. But there is like other side as well that not so many people like kind of realize it. Don't get me wrong, but most of the people, they expect that they put small amount of money into some assets and that they are getting huge rewards, like big portion of money back. Once you are expecting that you are gonna be getting huge profits from small amount of money that you put down, actually it might end up that you lose all money, you might be losing other assets, it might affect your personal life and so on. For example, you put money into wrong asset class that was not performing well, or you were not able to handle risk that was going on over there, or for example, you were listening not the right people. It's so common that there are people, they have some money and they go to see financial advisor that never invest anything, but yeah, it's financial advisor, and that kind of person is giving you, advice, which I totally don't like, and I think it's insane. There are so many other factors like emotions and so on. Hey, what's up guys, welcome back to Millennial Money. Last time we were talking about tips and rules that even Warren Buffett is following when he is buying a stock. Today let's talk about what are the mistakes that you should avoid in order, to be successful in investing. Of course, if you like it, you can hit the like button and subscribe button. I appreciate it a lot. Actually, I've been investing for already 6 years and this is what I love to do. So I appreciate every single of you that is watching it. The biggest mistake that Buffett is saying that is happening like pretty much every day is that people are trying to time the market. And he said, I don't know anybody that is successful that he was actually trying to time the market and so on.
I don't believe anybody knows what the market is going to do tomorrow, next week, next month, next year. I know America is going to move forward over time.
Timing a market or predicting the market, I feel it's not even possible. Yes, you might be sometimes lucky that you buy something that when it went down for some reason, you should know what is the reason. Most of the people, they don't care, they just see it went down, so I'm gonna buy it. And that's why most of the people actually are not successful, because that scenario that something went down, you buy it, and then it goes down even more, and even more, and even more, So guys, have in mind that actually trading is not investing as well, because trading, I feel it's one of the most common trend that when you are starting to invest, this is how you started, which it was not in my scenario, but I feel in pretty much most of my friends and most of the people I've been following that today they do totally different. They are like value investors and so on. They told me, well, I started years ago trading. Like literally 9 out of 10 people that I was asking, and they told me they were doing trading, they told me they lost all money when they started. Yes, it was small amount of money, but what I feel, when you lose money at the beginning, you are losing your faith into investing and so on, because especially in Central Europe, I feel like there are so many people thinking that investing is a scam, because yes, they just see this, that some ads that let's do trading and so on, they lose all their money, and of course after that they don't want to invest any money because you have a bad experience and it's hard to overcome something like that, especially when you are on the beginning and you don't have any other knowledge, so it's tricky. Other important mistake to avoid, what Buffett is saying, and I totally relate to that, is that don't take advice from the people that they are not successful in that field. Let's say that there is somebody saying that how you should invest your money, but that person never invested anything, you shouldn't be listening, Like for me, I was always like following this rule, like when I started like 6 years ago, and it was pretty much, I was always thinking about it, like let's say you have like something with your heart, right? Who are you going to see? Probably doctor, cardiologist, right? So it's the same principle that you should be following or listening people that they are successful in that field, or like you are taking advice from that people. So when you have a problem with your health, you are going to see doctor, not like, I don't know, construction worker. It's when you have a problem with your house, then you are going to see construction worker. And it's the same with the investing. You don't know how it works, go to see a guy that is successful, into investing, that make money into investing. So that's what I was always thinking, that it's important. Next one, really important to avoid, is huge interest or huge returns on their investment. Let's say 20%. I feel if somebody is offering, like 20% like return on your investment every year, for me, it's a scam. And I would not put money into it, because yes, there are people able to do 20% a year, which is like Buffett, right? But there is, not so many Buffetts in the world. There is just one. Like literally, if we are not able to learn from history in so many stories, so it has to repeat again, and it will, because there are still some scammers and so on offering some services. They want to actually get the money from you.
2009, Bernie Madoff pleaded guilty to what is likely the largest financial scam in history. The one-time Wizard of Wall Street ran a $65 billion scheme.
And it was just Ponzi scheme, how the Ponzi scheme works, that somebody gives you money and then you want to pay them back, like their return, and you have money from other customers. So it's kind of like circle that is never ending. At one point, if so many people need the cash, immediately, usually that provider doesn't have money. That's what he did. He guaranteed like huge returns, which it's not possible, right? And there is so much to learn from the Buffett, of course, but I just pick and choose the most, things and rules that I've been liking, or the mistakes to avoid. Other mistake that Buffett is saying that it's very common, it's like doing a leverage. He said, I don't understand the people, they do leverage. And for me, it doesn't have to be Buffett saying, don't do leverage. I would never do leverage, because if you don't have money for something, I would not buy it, Next one that I feel it's a very big mistake that people do, they follow some traders. For example, eToro, it's well known, and they had so many ads for that you can follow, you can copy some other traders. You pretty much click on copy and you are getting, news info what that person does, but pretty much if that trader buys something, you buy it immediately, because you are already following the profile. I feel it's insane, because you don't know, okay, does this person has their money into it, or it's just some guy that is, having some money from the customers, or you have no idea if this person is millionaire, and let's say that person buys Tesla stock, which is, stock that has like a huge potential in the future, but it's like volatile and so on. Probably I'm not okay to buy something like this in my portfolio. On the other hand, like YouTube platform, which is great for this financial knowledge and education, and I really like it, and I think it's important because you can be teaching something that a lot of people don't know. But the deal is that actually somebody is saying that I'm buying this stock, I'm putting $1 million into it, and that's the thing, that you have no idea if this person is buying it or somebody is paying that person make a video about it. So I would never make decision on something like this. Of course, if somebody is saying, there is a good stock to buy, I would do my research on it. Buffett is as well saying that try to avoid huge fees. He's meaning try to avoid unnecessary fees or expenses, because at the end of the day, they are taking portion of your profits, So pretty much don't try to time the market, or don't take advice from the people. They don't know anything about investing and so on, or don't copy people just because they are successful, like Elon Musk. He did a tweet that you can buy Tesla merge with the Dogecoin, just with the Dogecoin, and Dogecoin went up 35%, and at the end of the day, Dogecoin lost most of its value. Almost at the end, what I want to mention as well is that it's okay to educate yourself at the beginning, then you would invest money into stock market. You can do it that way. I think it's way smarter, because I know there are people, hey, I want to buy stocks, I want to buy this, and you ask them, hey, what is index fund, what is ETF, and they don't know. So what do you think, how long or how good are they going to be doing on the stock market or real estate or anything like that? That's pretty cool that these days you can learn all these things just from your home, from your room, and it's pretty much for free. That's what I really like about all this internet age and so on. At the end, the last tip is that I think it's one of the most important if you are kind of younger, because I feel that with all these social like TikTok, Facebook, YouTube and so on, and Instagram, that you see all these people spending money on their clothes, whether it's like influencers, they seem to be really happy. I even feel like society is able to exclude some people because that person is not traveling, that person is not spending money on, you know, expensive clothes, or even you make own food at home and you are weird. The thing is that what I see, and it's very common these days, that people that, let's say, are spending money like on traveling or whatever, that's okay, it's their life, do whatever you want. But they are even able to tell you why you should spend your money.
You guys that are buying $1,200 shoes, stupid. You guys that are buying $200,000 cars, stupid. You guys that are spending money on homes, no offense, but you're stupid. You don't need an expensive house. You don't need a country club yet. You need net worth. You need passive income.
Did you hear it at the end, that buying a house, ridiculous? And that's the thing, once you get kind of like financially educated, you know, like when you are buying a house for yourself, it's one of the worst decisions you can do. I mean, of course, you have to live somewhere, right? You have to buy it. What he's meaning, don't buy a house for yourself right away, like in your early 20s, let's say. Because if you are living there, it's a liability, it's not an asset, because you are not getting any cash flow. What he's saying, and this is my approach as well, like he's saying, you know, if you're 100K, let's say, you don't put it for your house, but you put it for 5 rental properties, like you put 20% down, like 20K for each, which is like $500,000, right? Like worth of real estate. So guys, with that being said, thanks for watching. If you like it, don't forget to smash the like button. I appreciate it a lot.